All right, welcome back to another episode where we break down what happened with mortgage-backed securities. Yes, mortgage-backed securities are what actually has a direct impact on daily mortgage rates. So let's break it down. As you can see, we're dealing with these past 5 days that are located in the box. I'll leave them in the box for now. I think we can still see what is necessary. So looking at the big picture here, we had a really strong rally as I talked about last week. And then this week, basically, they're just digesting these profits more or less. Whenever you have, and you can see how it always kind of goes in a stair step. So at this point, based upon economic news, based upon some of the points of resistance and support, where it ended up, the bottom line is nobody knows where it's going to end up. We can only hope, and hope it's not a method, that it actually gets higher. However, it's really going to come down to economic news. So let's talk about what has actually been happening and what impacted day by day. So on Monday, you see that it definitely dropped and it had this level of support at the 61.8 Fibonacci level. And some of the things that are being talked about in the news are the idea of recession indicators. Everybody's really searching to figure out where are we at, what is happening. There are several recession indicators talking about the unemployment rates, where if we get 3 months in a row, that we may actually be another economic indicator that we are in or are heading towards a recession. Overall, it really wasn't any market moving data. I think it was just more or less just digesting and working within this range because you had a high level of support here from a technical standpoint. On Tuesday, there was more economic indicators about shipping slowdowns and slowing down in the economy. They are saying with home prices are continuing to increase. So despite what everybody's talking about across the nation, on average, housing prices are still continuing to increase. On Wednesday, from an economic standpoint, we had some Fed speakers talking, and they kind of had a little bit more of a hawkish standpoint this time, where they're saying, hey, the economy's still strong. We don't know if what we've done is going to be enough, but they hedged a little bit by saying that they're going to wait until December to see some additional economic indicators and see if what they've done has actually had any impact, finally. And the funny thing about actual Powell talking, he really wasn't as hawkish. He really didn't talk about a whole lot to do with monetary policy, but he did mention that being in the Fed is, for working in the Fed like a decade makes you feel like you're a newbie. And basically it's saying that he still doesn't know what he's doing. That's kind of what he admitted. Anyway, so that was Wednesday. And then when we come into Thursday, you can see that the market reacted. Initial jobless claims that came out really were kind of steady. But what we're seeing is that continuing claims, or those that continue to receive benefits after the initial claim, rose about 22,000. So these have risen about 173,000 over the last 8 weeks. So it continues to show that employers are holding on to their workers, but the rise in continuing claims shows that once people are let go, it's becoming harder and harder to find another job. Beyond that, we're reacted to this moving average here. So it really didn't break through, kind of bounced back. And then when we got to Friday, and the other issue here that we had that really impacted it is the bond market. It was a really, really horrible bond auction. And, these bonds and mortgage-backed securities, they have to be sold in order for the market to move. And when they're not sold, if it's a bad auction, negatively impacts it. And then on Friday, consumer sentiment is continuing to show that they're really not that confident in the economy. You can see it's still reacting around this moving average. It is, and it did close below the Fibonacci. Not so very good, but we can't really tell what's going to be happening. So again, anybody telling you that they think they know what rates are going to do doesn't know what they're talking about. We're just going to have to wait and see from an economic standpoint what actually happens. So these are alerts to lock saying that, hey, the points of support have been broken through. At one point in time, it looked like we were going to drop significantly. We do have another layer of support down here, so it could go all the way down here, or it could react and go the other way. So we will find out on Monday. On Monday, we've got consumer price index, producer price index, retail sales, housing market index, and housing starts and permits. So, don't know if it's huge market moving news, but we may end up just falling in technical ranges, and it could just bounce around in a range for a while. We just don't know. So that's really where we're at. We had a good recovery here. We lost a little bit throughout all the way to Friday. Let's hope next week we recover a little bit. We shall see. All right. If you have any questions, please leave comments below. And until next time.